and welcome to the RE Source. I'm your host, Ryan Hill.
And I'm Gary Hawkinson.
That is the Hawk right there. Before we get started, hot off the presses, this just came in. Housing is stagnant.
Yeah, okay,
it's not
great.
shocking, is it?
Yeah, hot off the presses. We'd love to bring you guys some good news today, but let's be honest, we'd be lying if we told you anything different. Now, not everything today is bad news, but you know what? Let's rip this thing off like a Band-Aid and get the bad news out of the way.
Okay, here we go. 26 million people are unemployed, home ownership is out of favor versus renting, 19 million homes are vacant, foreclosure numbers are still climbing, big banks and the feds are pursuing 20% down payment requirements in another government money grab. They're trying to take mortgage interest rate deductions off the table, and NAR, thank you for fighting this one, loan officers nationwide just took a big hit out of their pocket, and finally housing starts are at 60-year lows, and they've been there for 33 months. But hey, pending home sales rose in March.
Now, this should come as no surprise to folks working in this industry. Uncertainty abounds in every segment of the economy, and prospective qualified home buyers, they're worried about another decline in home prices, and that's got them sitting on the fence.
And hey, if you think we're crazy, the giant that we know as the Wall Street Journal, yeah, they're trusted, real trusted. They write a lot of good articles. Yeah. They just wrote one called 5 Reasons Why the U.S. Real Estate Market Won't Rebound Anytime Soon.
Probably not a story you want to forward to a prospective home buyer, but hey, it's something you should be aware of because negative stories like this tend to go viral.
Speaking of viral, for another lethal dose of reality, check out the Bloomberg interview down below. It's pretty crazy. They're both kind of down, but it is a large dose of real estate reality, and you might want to watch at your own risk. Hey guys, on a side note, and we don't normally do this, but there was actually a really good interview about Elizabeth Warren on the Jon Stewart Show. Now you should definitely check it out. Elizabeth Warren is actually the new head of the Consumer Financial Protection Bureau, and you need to familiarize with both of them. This is actually pretty good, and it's a pretty good indicator of what they plan to do with housing financing into the future.
Now guys, this is a big deal because this agency, as we learned at the WAMP meeting this week, has a ton of power.
Yep.
This agency could either make our lives as real estate professionals really good or really, really bad.
Yeah.
Now, she does state that she would like to make and simplify the paperwork process while purchasing a home.
Which actually would be a welcome change.
Yeah. You know, and she is very well spoken and seems to inherently kind of take on a protector of the consumer or middle class kind of a mode.
Right.
But you know what seems really, really good on the surface could be quite a different story in real life.
Yeah, you see, the devil's in the details. Warren recently championed to have a quote-unquote level playing field for home buyers when it comes to financing a home. Sounds like a good idea, right?
Yeah.
Sure. Well, not so much. And guys, don't get me wrong, I actually like this girl.
Yeah.
But again, the devil's in the details. What was done under the cloak of having the best interest at heart for the consumer was actually a smokescreen to push all the business back to the big banks, eliminating thousands of neighborhood-friendly mortgage professionals' jobs.
Let's think about this for a second. The Fed set the rule into place, and the CFPB will inherit the ruling. But wait a second. Isn't the Fed independent from the government?
Yes, and wait another second. Doesn't the Fed have a vested interest in all these big banks?
Ah, yeah. And after all, the big banks are the Fed's best customers. I mean, they borrow tons of money from them.
And that's true. So if I were the Fed and my biggest customers, the big banks, were losing money hand over fist, what could I do to help my clients raise money and market share?
Good question.
I know. I'll step up and I'll regulate the competition's ability to make money. Aha! That'll make it difficult for anyone but our customers, the big banks, to make money. It's perfect. Everyone will be forced to work with our clients, the big banks, and they will make money again, and we no longer have any risk.
Perfect. Oh, wait a minute. One problem. As we said, the Fed is independent. It's basically the central bank for the United States.
Right.
Well, let's say it correctly. It should be independent from political influence.
Barney Frank.
So if the Fed is the government and they're private, how can they come into the real estate industry and instruct neighborhood lenders on how they can and can't pay their employees?
Precisely, my dear Watson. Precisely. Hey guys, we had a ton of fun at the WAMP event this week. They brought in Mark Savert from NAIHP and Mike Anderson from NAM, and they had a ton to say about the future of this great industry. And if you missed it, here are the highlights.
Hey, one notable insight. Both speakers indicated and validated what we've been saying all along. Realtor commissions, they're next to come under fire.
Check it out.
They're going after loan officer compensation. Is realtor compensation next? realtor compensation actually is being attacked right now by the large banks.
Did you guys hear that? We've been talking about that for the last 3 months, and nobody agreed with us. So
right,
listen in.
I've heard on the local level with my own shop, and also from realtors across the country, where they're supposed to make 6% of the transaction. The bank, if it's a short sale or foreclosure, they will actually tell them you're going to make 4% if you take it or leave it.
Tim Geithner said, came out of his mouth, the driving force for mortgages must be driven to the banks. Driven to the banks. And then he said, well, we got to make sure we protect some of the smaller players. But yes, they want to drive it. The driving force is to the big 4 or 5 because it's easier to control 4 or 5 big players than it is thousands. And I think that's their underlying thing.